Hi, everyone, and welcome to the AI Interconnect podcast. I'm Laurent, and I sit down with the most forward thinking leaders in PropTech, FinTech, real estate, and AI to uncover what's really working and what's next. And today we are talking to Nick Liuzza, the co founder and CEO of Beeline Holding. And if you have followed innovation in mortgage tech, you have probably heard about their AI agent Bob, their automation platform Blink QC, and the way they are reshaping home lending and compliance. Nick brings deep insight into how to scale trust, tech, and transparency, and without losing the human edge. And let's get into it. Nick, great to have you here. Welcome to the show.
Thank you, Lauren. Very happy to be here.
Wonderful. I'm very happy too. It's going to be a great conversation. Let's start with your own story. What brought you into PropTech, FinTech, ultimately led to launching Beeline Holding?
Yeah, good question. So look, in 2005, I was selling actually a nurse staffing company. I had sold that company and I was trying to figure out what to do next. And I decided to start a company called Linear Title and Closing, which was a title agency, which closed loans for mortgage lenders. Linear Title started in 2005. We became the second largest privately held title agency in the US. Very successful company, really built automation platforms and really took the title business into a very technical area at a time when technology was evolving. And the mortgage industry was actually exploding at the same time. And so we built a company that provided digital closing services to highly sophisticated lenders. And along the way in building that company, we learned a lot about the mortgage business. And when we exited that company in 2016, we merged with a company called Real Matters and brought Linear and Real Matters public on the Toronto Stock Exchange. Highly successful end to the story there, or beginning, depending on what side you're on. And our team basically was looking for something to do in 2018 when our non-competes were up, and really, that company was taken over by the Real Matters folks. And so we decided to start a mortgage lending business. We knew that the next generation, the millennial generation, and the generation behind them, which was so strong and so big, that they were going to have an impact on the mortgage market like baby boomers did back in the day. And one thing about the mortgage business is that it's archaic, lethargic, it's slow, it's paper intensive. And this next generation, they grew up with these phones. They grew up with real-time data, real-time information, real-time decision making. And the mortgage industry is anything but that. So we felt like the premise of building something that's highly sophisticated, 24/7, that could accommodate this next generation that was going to have a big impact on the mortgage market would serve us well. And that's the premise for starting Beeline.
I know it. Great beginning. What was the problem you saw that wasn't being solved at the time?
Well, listen, we're not the only ones out there trying to solve this problem. The mortgage industry is massive, and there's a lot of people out there doing similar things to us. I would say the reason why we're a bit different is, when you look at our website, you look at our content, you see us on social media, you know, there's no bones about who we're targeting, and we are targeting that next generation. And the pain for that generation is, they like doing things very quickly, and they like to get to, from A to Z 24/7. And again, mortgage information is not available or wasn't available, after hours or on weekends and so the pain point we're trying to solve is to make the path for this generation easier and faster, more transparent and accessible anytime you want it. And that's really the pain that we're solving.
Yeah, that's right. If you think back to those early months, um, what was the moment you knew Beeline was onto something?
Yeah, that's a great question. I don't think I've been asked that question. Well, we launched, we built started building our platform in 2019, late 2019. And by the time June 2020 came around, we had a pretty good working platform, all proprietary, completely front end, uh, proprietary point of sale where a consumer can find us anytime they want, and they can go through this journey, which is really, again, customized and branded for the next generation. And so the vibe, the language, the way that we process information, the way we collect data was really geared toward those people. And so when we launched in June of 2020, mortgage lending is a very crowded space. And when you're a new lender who doesn't have a recognizable brand, who doesn't have, hasn't done a loan yet, right? You can get lost or crowded. But, within our third month, we were closing over 100 loans. And, instantly I'm like, okay, I think we may have hit something here because when you launch cold, no one knows who you are, right? And you're competing against the largest banks in the US for customers, and you're able to build that fast. You feel pretty good about yourself. Now, granted, in June of 2020, the market was better and it was a good market and rates were lower than they are today. And so there was more demand for mortgages. So you have to take that into consideration. But I knew that we were getting through the applications very quickly. I knew that we were processing them fast. I knew that our brand was speaking to the next generation, and we felt really good about what we had built.
Yeah, fantastic. A great brand, a great name, and the right timing, I guess.
Well, timing was good for that piece of it, right? For the first, call it 6 months, but, when we got into 2021 and then the hint of rates started to, uh, surface that they were gonna go up, right? The whole market started to turn, toward the back half of 2021, and, we got into this really difficult time. And so at that point in time, the timing didn't look so good, right? If it was 3 or 4 years earlier, the timing would have been spectacular. But, the timing didn't feel so good when late 2021 got here.
No, that's true. That's true. My mistake. What has stayed the same in your mission since then, and what changed?
Well, that's a really good question. What has stayed the same is our commitment to building a faster, more transparent path for mortgages and leveraging technology with the right sort of blend of human intervention when needed, so that we wouldn't lose that sort of one-on-one appeal when someone wanted that one-on-one conversation. And so our commitment to get to that faster mortgage in a more compliant, easier way hasn't changed. But what did change, though, is our model kind of shifted a bit when the market turned and it became more difficult to find clients for mortgages. We were initially a conventional lender offering Freddie Fannie mortgages only. And when the market turned, which is now kind of a blessing in disguise, we decided to find a wider variety of loan programs so we could have higher conversions and we could offer a wider net to bring in more business. And so we incorporated non-qualified mortgages or non-QM mortgages into our platform. And so there's not a lot of platforms, direct to consumer platforms, where you can go to today and you can basically go down the path of receiving a conventional mortgage. And if you don't qualify, you can quickly be shifted toward a non-qualified mortgage, which is exactly what we do. And those non-qualified mortgages in some cases are more or better built for the gig economy, because a lot of these, earlier or younger home buyers, they don't necessarily fit in the Freddie Fannie box. Their income may be lumpy. Their income may be non-consistent. They may have W-2 income or 1099 income, and Freddie Fannie standards are very cut and dry, if you will. And so there are loan programs on non-qualified mortgages that don't even look at your income. They don't even consider your income, actually, like a bank statement loan. They look at the ebbs and flows of your bank statement. Sometimes it can be much easier to qualify depending on what your job is and what your bank statement looks like than a Freddie Fannie conventional mortgage. And if you're in a property investor, we were offered debt service coverage ratio loans or DSCR loans as well. And so if you're buying investment property, again, your income isn't even looked at. The key criteria is the rental income of the property you're buying. So now Beeline, which probably would not have incorporated these programs if the market didn't turn around. So I wasn't on that ball, and the bad market caused us to think a little differently. We offer these programs now. And so if you go to a large bank or you go to a top 50 lender, most of the time, because there's only a few of those top 50 lenders that are offering non-qualified mortgages inside of a conventional platform, it's game over. If you don't qualify, you're denied, and that's it. Whereas we will redirect you. Our AI will recognize that, hey, this is a good borrower for these other loans that we offer, and put you through a whole new journey and give you another opportunity or another bite at the apple, if you will. And that's something that makes us unique in a lot of respects. And it's a way that we're building our brand for the next generation. And one point to make too, I keep saying the next generation. Don't get me wrong. A lot of our clients are not just baby boomers or Gen Z. A lot of our clients are people my age, baby boomers, right? Gen X, right? Those particular people that we're doing mortgages for, they just prefer a more digital platform, and they gravitate to us. So we'll do a mortgage for anyone. Don't let me steer people in the wrong direction here.
Of course, that's wonderful. No, very, very clear. Let's go a little bit deeper into the Beeline model. Um, how would you describe what Beeline actually does on a day-to-day level?
Well, I mean, we're a bit unique in that, our core business is providing mortgages. That's not unique. Providing non-qualified and conventional is a bit unique, but still offering mortgages is not unique. And so, on a day-to-day basis, that's our core business, right? Finding people that want mortgages, offering mortgages, and closing mortgages. And then we have a title agency, right, which basically provides a title work called Beeline Title. The benefit of using Beeline Title is the processes are integrated, and we're able to get to the table faster because we're not relying on a third party. We're relying on our own processes, our own people to get to the table. And so, at the end of the day, that's our core business. We've decided, since we've built a lot of technology and software, that the mortgage industry is so big and so massive that we would start to license out some of our software products to create another revenue stream. And one thing about the mortgage business is it's a one and done business, right? You provide a mortgage, you close the mortgage, and then you're done with that transaction. There's no other revenue associated with that, right? And so, it's a strictly B2C model. And so we decided to license our software so that we could create recurring revenue, right? Because recurring revenue is something that everyone likes when you're running a business. It's more predictable, it's more repeatable. And so, we're starting to license out our Blink QC product. We built an AI chatbot called Bob, which is now a sales agent providing highly intuitive sales programs by basically licensing him out to the world. It's an international company now. So we started a completely separate company called Magic Blocks, and we're licensing out that technology through Magic Blocks. And so we are different in that we have both components. We have this sort of this B2B, B2C model and this B2B model, very similar to Amazon, by the way. I'm not saying we're going to be Amazon. What I'm saying, though, is that Amazon has a B2C model where you can buy any product you want, and then they have AWS, right, Amazon Web Services, where they license out their bandwidth and other technical tools. And so it's a model that has been successful. It's a model that we love because we are a public company, and Wall Street tends to like the B2B SaaS models. Combining them with a B2C model makes us feel really good. So on a daily basis, we're providing three different services. We're providing mortgages, we're providing SaaS licensed products, and we're providing title services.
Yeah, yeah. I wanted to come to that point where basically you've chosen to build not just one landing side, as you say, but the title company and QC automation arm. Why? I mean, if I may, why take on so much complexity? I mean,
Yeah, look, that's a really good question.
if I may.
That's a really good question. Yeah, sure. It's a great question. I think that, for us, we're building all this technology and all this software, right? And the mortgage market is so big. For example, the largest mortgage lender, Mortgage, I think, owns less than 10% of the market, right? And so, what that means is that, if Beeline owns, let's say, 1%, right? We're going to always be looking for new revenue streams. And by having this SaaS revenue stream, it's another revenue stream for us. It's repeatable, it's predictable. And it's really not that more complex because we have a team of people who focuses on just that side of the business. So it's kind of like we have a holding company, we have a mortgage company, we have a SaaS company, we have a but it's all run by different people. And so it's not that complex. Now, if we were trying to do everything with the same people, that might be complex, yes. But at the end of the day, it's not too complex. And the benefits of having, repeatable, predictable revenue in the B2B model, and having sort of a platform. We build software, we test it out in our own environment, and we license it out, right? 871 independent mortgage bankers out there, which is what we are, an independent mortgage banker. right? We're writing software for those people. We're not writing software for the large banks. They wouldn't license software from us. We're writing for other companies like us. And we're not scared to license it out to our competitors, right? Because we know we're going to get our market share. We're probably not giving away all of our secret sauce. But at the end of the day, the complexity is, even though it's not that complex, the different model is worth the pain, if you will, by creating another revenue stream for us.
Yeah, other revenue stream makes a lot of sense. Then you launch, it's Blink QC, you said, and Beeline Labs, that you started testing on your internal needs, basically, and then offering it as a SaaS to the other 800 mortgage bankers. That's what it is.
Yeah,
Correct?
exactly. That's exactly right. And so Blink QC is a QC product, as a Freddie Fannie lender, have to QC, a pre-QC and a post-QC, right? A certain number of your files prior to closing them and after you're closing them, you have to, go through a QC process. Prior to a closing, Freddie and Fannie mandate that at least 10% of your files get QC'd, and that QC process has rules. And so, the rules basically are you can send it out to a third party or you can do it yourself, but there's certain you can't do it, inside of your platform. You can't do it with the same people. It's got to be a separate sort of work group through a different software platform to offer that QC appropriately. And so and it's a painful process too, by the way, especially if you send out the work to be QC by a third party, which more than half of the IMBs do, invest other independent bankers. And so it's expensive. It's time consuming, whereas our product will do it for you very quickly at half the cost. In a matter of minutes, it'll spit out basically what the findings are, as opposed to a couple hours to a couple days by sending it to a third party, which can really slow your process up. And so you're right. Beeline Labs is our holding company that holds our SaaS products, and they hold the Blink QC product.
Okay, that makes sense. I love it. And okay, let's talk about Bob, your AI-powered conversational agent. Where did the idea come from?
So the idea came from Jay Stockwell, who was one of our co-founders. Our product team is based in Australia. So we write all of our software, all of our digital marketing, all of our product development, our web content, anything that's associated with product is built in Australia. We have an office in a city called Surfer City, believe it or not. That's the name of it, and on the Gold Coast. And we basically partnered or built an office with people that started a company called Nimble in Australia, which was a small balance lender, highly technical, very fast growing company that built software that could approve a small balance loan in a matter of minutes and fund that loan in a matter of minutes. And they spoke to a really similar audience, which we were trying to speak to in the US. And so there was a lot of synergies between the way they thought about their business in Australia and what we thought about our business here in the US. And so some of those key people happened to be leaving that company. We found them. Some of them became co-founders in Beeline, and we started an office. And so that's where a lot of the brain power and hardcore development comes from, is in Australia. And so at the end of the day, it's a really good work group between the US and the Australians who are building our software.
Okay, yeah, I love it. And then Bob handled over 7 million in origination during its pilots. What
Yeah.
worked and what broke?
Well, so Bob is, we were, if you go through national mortgage news, we were one of the first, Beeline was one of the first, we may have been the first actually, to introduce a AI chatbot to the industry, right? AI, driving the chatbot, meaning that it had its own brain, it's leveraging artificial intelligence, it's becoming smarter as it develops, right? And so, we had great success launching version 1 of Bob, back in 2023, I think it was June of 2023, where Bob was handling dynamic phone conversations, speaking our brand, speaking our voice, right? Uh, you know, much better than original chat models because it was faster, it was on brand, it was getting smarter with every single conversation. And so, Jay Stockwell and Sean Clark, another developer, really, and Jay has not only a technical background, he's got a psychology background and a digital marketing background as well. So he created this orchestrated model which leveraged proprietary software that he built, with Sean Clark, but also leveraged, 7 other language models out there, combined them together to build our own AI chatbot with its own brain, which is proprietary on top of this. And what he has done there is built not only a communication tool that's reactive and proactive, but it speaks your brand. It knows your product. It's very fast. It gets smarter for every single conversation that it has. And so it's dynamic. And so you're not necessarily having to, it's like an employee that gets better and better and better and becomes one of your best employees over time. That's what this is, right? And so it just gets better. And so we saw the opportunity because we started seeing these conversations convert into leads and into closings much better than having normal conversations with normal people. And then factor in that it can have the conversations any time of the day. And over 50% of our applications were coming in after hours or on the weekends. This tool became very successful for us in a very short period of time. And so we quickly learned like, okay, as a chatbot, we can also now start using this as a sales agent to go out there and start prospecting through SMS, through voice, which is being launched now, right? And we can have him provide lead gen services to our we call them loan guides, and really bring in leads through conversations by providing quotes, being proactive, downloading, a list of potential borrowers that are looking for certain types of loans and having and building a whole campaign that is an outreach with Bob, who again speaks your brand, speaks your language, can have really highly intuitive conversations and only getting better and better. Like, oh my God, this is not just mortgages. This is an international opportunity because everyone needs a tool like this. And so when you look at Magic Blocks now, which is based in Australia, and it has just launched its platform in June. It's got 18 clients. It has their international clients, by the way. It speaks every single language out there. And you can go to this platform. You can build your own sales agent, in the morning, and that afternoon you can be live with your own sales agent or your own chatbot, however you want to build it, right? In a matter of a couple hours, speaking your brand, providing services to your customers, and at a fraction of what it would, I mean, peanuts compared to what it costs you to build this yourself. And it's highly customizable, highly intuitive. And so there are a lot of other chatbots out there, but this one, because it's the orchestrated model with its own brain, is a bit different than a lot of the others out there. And so now Magic Blocks is part of the Beeline Labs umbrella, if you will, and it's out there and it's a product that you can go out and license and use right now.
That's wonderful. I love it. That's exciting. And yeah, basically, most CEOs talk about AI strategy, but you have made personal investment into that growth. And what gave you that level of conviction?
Well, look, I mean, first of all, using AI on the front end of our platform with Bob is just a part of our strategy, right? The AI strategy goes much deeper because when you think about the mortgage process, you should think about it from customer acquisition through locking a loan. And then once a loan is locked, there's a whole other process to take the lock to the closing. And so there's a lot that we're doing with AI on the back end of our process, or post lock, if you will, right, to expedite the program. But we became very confident. When we launched it, we had a high level of confidence. But when we started seeing the numbers and the conversations and seeing the reviews and understanding that this whole next generation, again, that grew up with these phones, right, that prefer to not really speak to humans. They prefer to kind of like get their information as fast as they possibly can in the most accurate, compliant, quickest way that they possibly can, which is what AI does, right? And so we became, we thought we were onto something because again, we're thinking about 75 million millennials out there that that don't necessarily want to speak to someone, and they want to shop on Christmas Day, or they want to shop for, at 2 o'clock in the morning, or, on a Saturday. Right. And so, we knew that we were onto something pretty good when we started seeing the success of the product in the field. We had a good premise prior to, but the success and the conversations and the conversions and the reviews led us to a high level of confidence. At the same time, we were building, data extraction tools using AI on the back end of the process. We're at some point in time, we're going to take Bob and combine it with Blink QC, which is an underwriting tool, right? It's even though it's a QC tool, it's underwriting the file all over again, and we'll have automated underwriting whereby Bob will say, hey Lauren, I noticed that your application is finished. I see that we have almost everything we need to move forward. I am missing your 2024 tax return, and I'm missing a bank statement from January of 2025. If you can provide those to me right now, I can underwrite your file right now in a matter of minutes, right? That's where this thing is headed, to where you're going to be able to kind of now, underwrite this whole damn thing. Or, I'm sorry, this whole darn thing, and do it quicker, faster, in real time, basically, which is insane because 4 or 5 years ago, no one was thinking about writing an underwriting a mortgage file in real time. But now that you've got an agent that can communicate at a high level, and you have a tool in Blink QC that can underwrite a file, and you put them together, and the whole complexion of the market is getting ready to change, and that's where we're headed, basically. I don't look. I mean, Beeline's not the only company doing this. Other companies are doing this. I think we're doing it better than a lot of other ones out there. I'm sure some of our competitors think they're probably doing it better than us, right? But at the end of the day, this is where the market is going, and the market is massive. And Beeline is gonna be one of the companies that capitalizes on this opportunity.
Yeah, that's awesome. You're operating in a heavily regulated space. How do you balance innovation with compliance?
Yeah, so there's no rules just yet on that have come out on how sales agents are going to be regulated in the mortgage industry. So it's hard. It's hard to really kind of figure that out. There's a lot of regulation with loan officers and the type of conversations that they have with their customers or their borrowers, if you will. And there's a lot of regulation around that. We call them loan guides. We don't call them loan officers, but they're the same thing. They're licensed to provide mortgage services and to have conversations. Most of those conversations fall under licensed activity, and so you have to have a licensed agent that can have the conversation. The rule that we are sticking with right now is that Bob understands and knows when a conversation switches from a casual conversation to a licensed conversation. And for now, when that happens, then Bob is saying, hey, Lauren, listen, it's probably better that I get a loan guide engaged in this. I can connect you right now, or we can schedule an appointment. Tell me what's best for you, because now we're starting to get into more technical conversations that require a licensed loan guide to have the conversation, right? Now, at some point in time, that may change. And I do know that some companies out there, and Beeline is not doing this, but some companies out there are taking the position that you can't regulate technology, and technology can do what it wants to do. And I don't know if that's right or wrong. I really don't. I just know that we're a small company at the moment, and we're going to take the more conservative view on this until there's some more content out there and some clarification on the regulation. So that's the way we're doing it right now, as it relates to licensed conversation.
Yeah, oh, that's great. So, what's your approach when it comes to we mentioned it a little bit, keeping a human in the loop, especially in decision like underwriting, and then it's the QC. But any anything you want to add on this?
I'm sorry, when you said a human in the loop, what did you? I'm sorry, I missed that.
Yeah, I mean, obviously, some of your Gen Z or wants to talk to a human. Then that's what I meant.
Oh yeah, yeah, yeah. I'm sorry. Yeah, listen, that option is available. I mean, we have loan guides that have conversations all day, every day, and a lot of people, don't want to have a conversation with a sales agent. They want a live person, right? This is a very complex transaction, and it is, it could be the largest purchase most people ever make in their lives, right? And so there are a lot of people out there that want to speak live, and so we have those people available to have those conversations. They're not as available as Bob is after hours on weekends, but they are available. And we're having plenty of those conversations. So there's inflection points in the process. And for example, when you're going through the point of sale, Bob is right there and he's helping you walk through it and talk through it. But you always have the option to basically go to a loan guide if you'd like to. And then after every single application is completed through our point of sale, we make a phone call and we reach out, every single time. That's happening all the time. So that option is always there. You're always going to get a live person call you after you finish the application. Now, you don't have to necessarily speak to that person. At some point in time, there will be a conversation because the technology is not replacing the entire mortgage process. So then more than likely, there's going to be a conversation that's going to happen at some point.
Let's talk about the hard stuff. What's been your biggest challenge in the last 12 months?
Well, I think, well, if you don't mind, maybe I'll back that up a little longer than 12 months. But, when the rates turned, it was very difficult to secure capital in order to build our company, right? And so no one wanted to invest money in a mortgage company building a SaaS platform when the market was so bleak, basically. And so that was a very difficult time to get through. And, we kept our foot on the gas pedal. We didn't scale back. We didn't lay a lot of people off. We decided to bite the bullet, keep our foot on the gas pedal, and keep building because we knew the window would open at some point, and hopefully it's going to open here pretty soon. And when it does, you have to be ready. If you're not ready, then you're going to miss an opportunity. And so that was a hard decision to make, number one, because we were losing a lot of money at the time, being an early stage young company and in an industry where you knew it was going to be difficult for a period of time. No one knew it was going to be this long, but you knew it was going to be hard. And you also knew it was going to be hard to raise money. But we were confident in what we're doing. We're also confident in the market turning around at some point and the opportunity surfacing, for us to offer everything we've been speaking about. So that was a hard decision. It was a very hard, and it was hard to get through that period of time, call it 3 years, where we had high expenses and very low revenue. And so, that was very painful, getting through that. But we didn't waver, and we stuck to the course, and it's going to pay off for us.
No, hard time and followed by better time. Congratulations up to now. How are you thinking about efficiency and scale, especially in today's capital environment?
Yeah. So, I mean, from an efficiency standpoint, we know what the sort of legacy KPIs are, in terms of days to close, lock to close, application to lock, right? We know what all those historical numbers are, right? And so when we think about efficiency, we think about cutting those numbers in half, right? And so when you talk about Bob, generating 7 million closing, being responsible for closing $7 million worth of loans, that's a very small amount of money, and talking about closing. But that was, that's a very early indication of, okay, this AI is starting to move the needle here. We have $7 million in originations, right? Or closing volumes. We closed $7 million worth of loans that we wouldn't have had if we didn't have Bob. And so we start thinking about, now, you can have all the AI in the world, but if you don't start to see a lift in your business and you don't have a metric behind it, then what are you doing? You're just using the word AI to use the word AI. And so, when we're able to publish those sort of metrics, when we can say that we're converting 33% better, which we are with Bob versus a human being, when we're generating, real revenue from a real conversation that we had that was impactful that we wouldn't have had if we didn't have Bob, right? That moves the needle. When we start seeing our loans, go from, 30 days average to 20 days average, right? And we know that AI is driving that, right? That gives us a high level of confidence, right? And so that's kind of, where we are. I think we were always confident in the AI. And I think, it's starting to show up, especially with the market starting to improve a bit as well. You see it impact more. A great example is when rates come down, demand will go up. And when demand goes up, that means that people will be more proactive in seeking out mortgage companies. They'll start making phone calls and sending out, and reaching out themselves as opposed to us constantly reaching out to them. And when that happens, legacy mortgage companies have to have those conversations. They have to have people to be prepared to have those conversations. So it's a frenzy to hire as many people as you can possibly hire to make sure that you don't lose those opportunities. Unlike us, we're not going to have to hire as many people because we are equipped to have those conversations. And we know the quality of those conversations is very high. And we also know that the acceptance and the performance, which leads to higher customer satisfaction of those conversations, is all very good. So we know when these rates come down, we're not going to have to go hire 20 or 30 or 40 or 100, loan officers to have these conversations because we're already ready to have them. And so that's just one example how you're leveraging your AI to kind of move your business through the next channel. And again, as those people move through the process, conversations, top of the funnel, lock, and then back into the process, where we have, again, AI doc extraction, where we're pulling data from documents way better than OCR ever did, right? And using that data to start and complete tasks way better than you were ever able to do in the past, and to analyze it with the AI, right? And you see, I mean, look, I mean, OCR is only X% accurate, right? AI is double that, right? And so you see all that and you have a high level of confidence because you know that the technology is so good.
Yeah, that's great. Is there is there anything you tried and ended up dropping?
Well, we didn't talk about Beeline Equity, and so Beeline Equity is one of our equity products that's not, by the way, it's not fully live just yet. It's still being developed. We have closed the transaction, and we're going to close a few more here in the next couple of weeks, and then we're going to go to a wider launch at some point in October. But it's the only product that I know of. Well, let me say it this way: we will be one of the only mortgage lenders offering a product that will allow a consumer to tap equity from their homes that's not tied to interest rates, and it's not a loan. And so, it's leveraging a partner that has a cryptocurrency tied to the public record, and that partner will be basically leveraging crypto, selling that crypto, delivering cash to us, and we will basically fund transactions to our consumers that are looking for liquidity that can't qualify for mortgages, or they're looking for liquidity and don't want monthly payments. And so we're very, very bullish on that particular product. It is very complex, and it is breaking new ground. So it's taken a little longer to get where we want to get to in terms of a full scale launch, but we're getting there. And we're going to be one of the first mortgage lenders to actually leverage a coin at large scale. I'm not talking about, here or there. I'm talking about at scale to generate significant revenue. Um, by leveraging a crypto that will be sold into the crypto market, and backed by a recorded deed in the public record, right? Which is a win-win on both sides, both the crypto side because it has value, and it's not intrinsic value based on nothing. It's based on the value of your property, and the security is the deed recorded. To the consumer, it creates liquidity like in a way that's not seen or hasn't been seen in the mortgage space before. And so we're very bullish on that. And so at the end of the day, when you combine this Beeline Equity product with our mortgage lending products, we become very unique, very, very unique compared to the other animals out there or the other mortgage lenders at the end.
Yeah, that sounds great. Okay, then when you look back at your personal role as CEO, what's one thing that you have changed in how you lead?
That's a great question. So, I've always believed in empowerment, and in every company I've ever had, it's always been about empowerment, and it's been about hiring the best people with the highest ceilings. And in our view, a high ceiling trumps experience with a low ceiling. And so we always like high ceiling people who are free thinkers, who don't need to be micromanaged, who can follow and lead. And that's very important to how we build our company, and that will never change. We want free thinking ideas. We want people that enjoy coming to work. They put their fingerprints on the company, and the sum of everyone's fingerprints is the sum of the company, or is the company at least. And so that's really important. The mortgage business is a bit more complicated than the title business. It has a direct to consumer element of it. So, taking the spirit of empowerment and making sure that, you are managing it properly at a high level without micromanaging the employee, I would say is really the trick here, right? Because we have to follow certain compliance standards. We have to make sure that our employees are not crossing the line, the compliance line I'm talking about. And so I think what we're doing a bit different is making sure that what we're building has the spirit of empowerment, the spirit of free thinking, but at the same time, there are some high level rules that are put in place to make sure that we don't cross the Freddie Fannie standard lines and are doing something that's not compliant. So it really, at the end of the day, it's finding that magical mix between the two, um, um, and allowing us to attract high ceiling, high level employees who don't feel like widgets in your company, and they feel like they are carving out a career. At the end of the day, What we want to do is close a lot more loans with much fewer people and pay them more money than our competitors do to build a better mousetrap. And that's a combination of making sure we're hiring high ceiling people in conjunction making sure that we don't take away their creativity, but we harness their creativity so it doesn't, maybe harness isn't the right word. We at a high level, we manage their creativity so we don't cross the line and do something that's wrong and get a black eye for that. And so I didn't have to worry about that quite as much in the title business or in my other businesses, but now we have to worry about that a little bit more than we do here, than we did in the past.
Yeah, I love it. High selling people. I don't know if I heard this before. Fast forward to 2026 or further up. Where is the market headed? And what role do you want Beeline to play in that future?
The real estate market runs in cycles. We all know that the cycle has been bad, but the real estate market can't stay down forever. I mean, the housing market has to normalize, and it has to get better than what it has been at some point in time. And it feels like 2026 is going to be that time when it does. There was always a joke, in 23, 22, 23, 24 22, I'm talking about 2023, 2024, with the industry, everyone said, stay alive till 2025, right? And so, because so many companies were failing and going out of business and it was difficult. And so the whole thing was stay alive to 2025, that so when you get to 2026, we can all flourish. And so kind of feels like that's what's going to happen here is 2026 is going to be where it all comes together for not only Beeline, but for the industry, right? But the industry needs a win. And so it looks like we're going to get an interest rate cut here this Thursday, right? It looks like we'll probably get another one later this year. And, it feels like we're on the road to kind of getting into lower rates. That means demand will go up, cash out refis will come back, Beeline will have its equity product. So it feels like for Beeline, it's all coming together at the right time. And don't get me wrong, we would love it for it to come together in 2024, but having to wait 2 years is not the worst thing in the world, as long as it does happen. And it feels like it's going to happen. Regardless of that, we are still growing our revenue, 28, 30% quarter over quarter, which isn't great for a small cap young company, right? It's not setting the world on fire, but when you take into consideration how bad the market's been and how difficult it's been, it's a pretty good number. We'll start seeing that go to 100%, 200%, 300% a quarter as the market normalizes and as we introduce our new products we are built to grow and scale very quickly. Having tailwinds versus headwinds will help us get there.
Absolutely. Yeah. You have talked about moving Bob into underwriting, scheduling, the borrower's education. What would that look like in practice?
Yeah, I think right now when you look at Bob from a consumer standpoint, and it's a conversational tool, whether it is being reactive or proactive, it's a conversational tool. So it's already being moved into providing resources and information like an encyclopedia to our loan guides, right? That's being developed. That's on the back end so that our loan guides can respond to when someone does want to have a conversation that is one on one, and there's a very complex question that may resolve some research, or you have your own sort of like AI tool to ask right there on the spot. You're just basically switching to provide a very fast answer. Um, again, using it as an underwriting tool and having Bob as the mouthpiece, right? At the end of the day, to underwrite files in real time, to shorting the process, scheduling loans to be closed, handling issues that may arise at the closing table, right? All these are things that are on the roadmap for Bob. Some of them are in different stages than others, and some of them are already in beta. But at the end of the day, you know, um, it's not going to be like the Wizard of Oz where you've got this one guy behind the curtain, just doing everything and that happens to be Bob. That's not going to happen. But what is going to happen is you're going to see the process that may be this wide, right? You're going to see maybe this much of it, handled with Bob being, you know, involved in it in some way, shape, and form. And so maybe it's like that, but it's getting like that and like that. And every single day it's, you identify something that's potentially a better way to do it. But the people element isn't going to go away. At least it's not going to go away anytime soon, right? It has to be there. It's too complex of a product. The conversations have to happen. The AI is a tool to augment and accelerate and to perpetuate a legacy, difficult, lethargic business.
That could move fast.
Yeah.
Anyway, do you see a moment where Beeline offers its own AI infrastructure as a service to other lenders?
Well, we kind of are already doing. I mean, we kind of will be doing that here pretty soon. In terms of offering, being a wholesaler or offering like a complete technical end-to-end platform. I think we're going to pick our spots and offer sort of like certain components. I don't think we are ready to just basically say, come and use the entire Beeline platform, right? And I know there are other lenders out there that are doing that, and that may be a really good business model. Maybe we are missing something there. I don't know. But for now, that is that's a very big undertaking. And that was something that would be very distractive as opposed to looking at it as a modular product by product at the end of the day, right? And so that has a much different impact to your staff and to your people than what a modular approach does, like which is what Beeline is embarking on.
Wonderful. Nick, you have built something bold. You have backed it personally. What advice would you give to other PropTech, FinTech founders trying to scale a real platform with real impact?
Yeah, I mean, look, that's a question I get asked a lot. I think really at the end of the day, it's stay true to yourself, stay true to your model, but understand that don't be stubborn about your model. Right, your model may have to change, and you may not have drawn it up the right way. And if you identify another way to go about it, and you feel good about it, then go for it. Right. I think you can't be. I'll use the word stubborn to your model. At the end of the day, if market conditions call for something different, then you may have to do something different. Never give up. Keep the sense of urgency and the passion at the end of the day, because if you're not passionate, your team won't be passionate. And so it's important for you to always remain upbeat and passionate. And if you don't feel good about something, be transparent, honest at the end of the day, and make sure that, you're able to build a team that will buy into the vision, contribute to the vision, and be able to build a team underneath that sort of leadership team to build a vision underneath so that your employees can buy into the vision and they can be part of the team as well. And so, it's kind of like a train pulling into a train station, and sometimes you have to lose some cars, which may be a different process or a different model, and you have to put some different cars onto the train, and then you go. And you may have to pull into a different train station, and then you may have to do the same thing. So, be flexible, be true to yourself, and remain passionate, and you should be okay. This is, this real estate market can be tricky to maneuver, and when it's good, it's good. Everyone looks like a hero. When it's bad, and you don't necessarily look so great. And so you have to really know how to manage the bad times, and don't let the biggest advice I can give someone who's just getting into the prop tech, anything in the real estate space is don't get drunk on the market, right? When the market's good, everyone's doing good. And you may not be doing anything that's so compelling or so different. It may just be market driven. And it may not be, but it could be. And so don't get too high and too confident in a good market, and don't get too low or too down in a bad market. That's what I would
That's
say.
true. Be humble. Okay. Any final thoughts on where trust, AI, and real estate are heading?
Well, look, I think we covered a lot of that already, right? At the end of the day, but I think that, at Beeline, we're leveraging AI to make an impact for the consumer. The benefits are, faster turn times, easier process. For Beeline, we're leveraging AI to increase our margins, increase our cost. Decrease our cost, right? Become more efficient at the end of the day. And so those are the principles we founded the company on. And I feel like we're executing on what we originally set to do. So look, AI is just scratching the surface, and I will reiterate, AI is not going to replace the human side of the business anytime soon. The human side needs to remain intact, because this is a complex process. It is heavily regulated. It is the biggest purchase someone will make in a year, and so those conversations are still going to happen. AI is an augment around it. At the end of the day, that's where we are right now as a mortgage, as an industry in mortgage.
Where can we find you or your company for our auditors to
Yeah,
have?
so we're makeabeeline.com. That's our web address. You can basically visit us there, apply for a mortgage, receive quotes, learn more about us, we have we are a publicly traded company. Our symbol is BLNE. We're traded on the Nasdaq. So you can find us, in any of the publicly traded tools that you may use to search companies. And then, we have an investor relations webpage on our site as well for investors to go to. So, and then we have our social media presence is probably not as great as we want it to be, but that will be improving here shortly, and you'll see a bigger social media presence from Beeline as well.
Nick, this was sharp, honest, and forward-thinking, exactly what's the kind of conversation we love to share with our listeners. And thank you again for joining me on the AI Interconnect podcast. Thank you, Nick.
Awesome. Thanks for having me. And it was great meeting you, Lauren, and I appreciate the invitation, and good luck to you in the future.
We can do that in a year from now and see the evolution.
Let's do that.
Thank you so Let's do that. Thank you very much. And that's it for today's episode of AI Interconnect. If you enjoyed it, share it with someone who's building the future, or better yet, someone who should be. And until next time, stay curious, stay creative, and keep building. Thank you.